Thank you so much for joining us. We're very excited here at TipRanks. First and foremost, I want to share with you all that I am not a financial advisor, so nothing that I'm saying here should be taken as investment advice. That is first and foremost incredibly important. However, with that being said, I do want to let you know and have you think about me as if you're getting ready to build a house and you make your way over to Home Depot or you make your way over to Lowe's, and there's usually someone very nice to greet you at the door and show you through aisle to aisle where all the right tools are, so then you can go ahead and build this house that you're looking to construct. Now, in my case, of course, and in your case, we're looking now to build an investment portfolio. So here at TipRanks, I'm the customer success manager. My name is Ari. And again, not a financial advisor. So just prefacing with this, so we're all now on the same page. And guys, I'm incredibly excited because TipRanks right now, putting our tools in your hands when the market is in a total state of flux is the key. And it's a key to unlocking really a very successful, lucrative investment future, just given the fact that you're going to be putting tools into your hands that a lot of retail investors just don't have. Just by a show of hands, if you can raise your hand with the raise hand icon, how many of you currently have either TipRanks Basic, Premium, or Ultimate? Amazing. I'm seeing all the hands fly up. I love to see it. So basically, guys, what we're going to do today, I'm pretty simple. I like to keep it very casual. So with that being said, Daniel, my colleague, is also here on the call. If you have any technical related questions when it comes to Zoom, because guys, I'm going to be honest, I'm not the biggest technical guy in the room, but I will share that Daniel is more than happy and willing to help you guys out. If you have questions related to Zoom, please send them to Daniel Rosen. He's got that orange TipRanks background. Now, with that said, basically what we do, guys, here at TipRanks, definitely with my team, customer success, B2C customer success, most importantly, is make sure, again, that you guys have those investment tools that you're going to need to make informed decisions. But when we're here in the office at TipRanks and we're going through morning by morning, what exactly is going on in the stock market? How do we continuously provide you guys with the tools that you need and the information that you need? The market is changing day to day. Not only between the war with Russia and Ukraine, tensions with China and Taiwan and the United States, midterm elections are coming up. And then on top of all of that, we're in the midst of earnings season and a blackout period right now when it comes to the Federal Reserve. So there is a lot going on. And the first thing I always like to do in the mornings is just round up my team and we have a conversation generally on this macro level overview of what's going on. Why? Because in order to make the wisest possible investment decisions, you at least need to have that understanding of what's going on. That is first and foremost. So of course, we do have the news related articles on TipRanks for you guys. And just last week, we had earnings that came out with big tech name earnings coming out, right? We had Google, Amazon, Microsoft, Apple, and the big one I'm sure you guys are all well aware of by this point is Meta. The stock really plummeted on Wednesday just after earnings. But it's important to have that backdrop of what's going on. As I share typically with my team, is if we're taking a look at the upfront, right, the immediate earnings reports that are coming out, I like to use this term, this is my term, emotional investing. Now, I use that term because it's really, really exciting, and investing can be for some really, really exciting. But I like to take a seat, I like to have a breath, understand this macroeconomic backdrop so I can have a relaxed point of view on the market before I even get to my investment tools. Now, I do that because I want to know, given the stock market is a forward-thinking vehicle, what's to come, what's on my horizon. And if I know what's going on generally in the news, I can already start to pick out the right tools that TipRanks has to offer. Now, moving into this week, the way I already see the market opening up today is we're probably going to open up flat, if not already on our way down. As I said last week, we had earnings reports that came out, but right now the market is not driving on earnings. In this market, we're really looking at two data sets. We're looking at inflation and we're also looking at unemployment data. So in regards to those two data sets, this week we already have with the Federal Reserve coming out with an interest rate hike. Most likely investors, they're already preparing for a 75 basis point rate hike. What we're going to see is that announcement. And then of course, something is going to happen, right, in the stock market. We want to already be aware of that before we get to our tools. So now with that being said, I want to move forward with the understanding of this backdrop. Federal Reserve comes out, they're going to announce their interest rate hikes, what the market right now is running on, really, again, inflation and unemployment data, and then move into some of the tools that we already have now for you guys to take advantage of. So we are going to jump to our very first tool that I want to bring up, which is our website traffic tool. Now, in a moment, I'm going to switch to sharing the screen, but I'll preface with sharing that the website traffic tool that we have at TipRanks, it's not traffic of those who are coming onto TipRanks and then typing in a ticker symbol and landing on that particular stock page. This is actually people who are searching for a domain name of a company and going right to their actual company website. Why is that important? Because we need to begin to understand trends that are happening within the market. If we can obtain the information, begin to look at patterns, we can start to do our best to speculate and predict what may come about, right, when the company announces earnings. So I'm going to go ahead and share my screen. We are looking now at the TipRanks homepage. You type in tipranks.com. Here we are, voila. Now, the stock that I actually want to go ahead and use is a fun one. It is Netflix. As you guys know, Netflix has been in the news a lot recently. And I'm going to walk you guys through really what I do the moment I land on one of these pages is I'm taking a look immediately at what the stock has been doing over the past 12 or so months. You can hit year to date, and we can see that when it comes to Netflix, it's down a little over 50% on the year. So immediately when I'm looking at a chart like this, there's a red flag that flies up. There's something that's been going on with this stock. Now, the second question comes to mind, is this a buying opportunity or is this something that I should stay away from? Now, when I take a look at Netflix and I understand, again, what's happening, their competition, I can start to piece a story together. However, if we take a look left-hand side and scroll down to website traffic, here's where all of our information becomes available to us. So we can see in January, we have Netflix with a peak of users. And if we just hover over to April, we see a massive decline, right, of those who are going to Netflix.com. Now, Netflix is a subscription-based site. So if you're going to Netflix, chances are you're subscribed to Netflix. You're either going to go there to watch a movie, or you're going to Netflix probably to sign up. You're going to check it out. They're going to try their best to hook you on the sale to get you to sign up for Netflix. But you're going to Netflix because you actually want something from Netflix. And so when we take a look at what happened here, just this trend alone from January to March with a decline, we could see that we have a stock share price that went from $427 in January, and making our way to March, it already went down to $375. Now, if we just take a look at that, we can almost shrug that off. But because our job as investors, as forward thinkers, is to try our best to formulate a picture and then do our best to make a prediction on what may happen based on all of the data at hand, we can start to do so. And we get another month entering April with another decline in traffic to Netflix.com. Now, for me, that's very alarming as an investor, because now I'm thinking, is this an investment, if it were in my portfolio, that I should keep? Obviously not a good trend when you're looking at this graph. And it's no coincidence that back in their last two quarterly earnings reports, Netflix actually missed on their earnings. So if we had this data on hand for us at our fingertips as investors, we already have the information that can prepare us for what that earning report may come out with. And furthermore, we can make an informed investment decision Now, here's where it gets very interesting because, of course, the good old adage goes buy low and sell high. For me, I don't typically use that one often because I'm a longer-term value investor. But when you think about, right, you want to buy at a stock's lowest possible point, if that stock has potential for it to go up, we could take a look at what's happening in June, and we can take a look at what happens in July, and we see that there's growth. And then we go to August, nominal decline, but we came to their last earnings report, and Netflix actually reported that 2.4 million new subscribers were added to Netflix. So again, having this information at hand is going to make us make an investment decision before, I want to say, the rest of the retail investors out there actually have this information. And it's no surprise that just from August, right, to September, that stock price is already on the rise. So you have knowledge at your fingertips to make that informed decision. And here we are, we're going to jump into actually Meta. Okay, so again, guys, jumping over, type in the Meta ticker. Here we are, Meta Platforms, and we can see that year to date, we are down 70% on the year. Now, this is very alarming, but again, we have to paint that big picture for ourselves on what may be going on. And when I'm taking a look at a stock like Meta, yes, I can look at what's happening with website traffic. That would be certainly an interesting tool. And we can see that there's actually a trend, right, of users who are going on to perhaps Facebook. But when it comes to Meta, a very interesting tool that we can use at this point in time based on what's going on is actually our insider trading tool. And why? Because we had a lot of news came out. Of course, Meta came out with their earnings this past Wednesday. And when it came to Meta's earnings, they, of course, missed. So they missed, which wasn't too big of a shocker, just based on the fact that right now at this point in time, we have Facebook. I mean, Facebook predominantly generating their revenue through advertising. Now you have companies who are reallocating their budget. Not a lot of companies are advertising. Those advertising dollars are down. That was actually also on YouTube, right? We see that trend, Google as well. But Mark Zuckerberg is also busy right now building the Meta universe, right? The metaverse, which is, it could really be something. It could be something, maybe it's nothing. And this is what we're here to investigate. Is Meta a buying opportunity right now at this point in time? So we go into insider trading and we can see that what's been happening. There is a trend. Corporate insiders sold shares worth $4 million in the last 3 months. Interesting to note at this point in time. Now, if we scroll down, we have a list here of these insiders. Now, the insiders here, you can see, you can check off what insiders you want to look into, whether it's an officer or a director, an owner, stakeholder here over 10% or other. I like to stick to what they're actually doing, if they're making an informative sell or an informative buy. Now, most importantly, when it comes to informative sells and buys, the biggest understanding for us to take away here is that an informative sell and an informative buy is when one of these officers, one of these executives, are actually using their own money to buy or sell. That's incredibly different from stock options, right? It's somebody's own money. And I don't know about you guys, but when I'm making an investment decision, if it's my money, I mean, I am watching it like a hawk. I want to make sure it's safe and protected, and it's going to be put into an investment that, of course, is going to go up. So I want to take a look at what's been happening, and I'm going to hit informative buy and informative sells to see what these insiders have been doing over the past 3 months. And then I have to ask myself a huge question. I mean, for me as an investor, when I'm thinking about what insiders are doing, I know that these insiders, the executives, the CTO of Meta has information that I certainly do not as a retail investor. And when I look, the red flag for me is taking a look at Andrew selling off shares of his own, making that informative sell. And we have a president, Global Affairs, also selling. Andrew comes back in and sells again 6 months prior. And so we have a list here of what these insiders are doing, which if they have that insider information, they're going to make, as anybody would, an investment decision with the information that they have at hand. Now, of course, we don't know what information they have. We don't have all the data that they have, but we do have our insider trading tool, which allows us to understand that if Andrew is selling and he's the CTO of Meta at this point in time, chances are that their next earnings report that may come out, that the stock in the next 3, 4 weeks, 2 months, 3 months may be on the decline. And we saw that playing out, of course, over the last 3 to 6 months with each of their quarterly earnings reports coming out. Now, we also know that at this point in time, Mark Zuckerberg is very open, right, about building out the Meta universe and continuing to grow it. And he's running through a lot of their cash. And that makes a lot of investors very worried. But what makes me more worried is not necessarily that he's burning cash. Because if I think back to before Facebook was Facebook, before Amazon was Amazon, before Google was Google, I mean, all of these guys from Jeff Bezos, Bill Gates, Mark Zuckerberg, they weren't in the limelight, right? They were really in the shadows building something big. And then all of a sudden we had our Facebook, we had our Google, we had our Microsoft, our Apple, et cetera, et cetera. But now that Facebook is in the spotlight, now that Meta is in the spotlight, excuse me, we can watch what these insiders are doing with that knowledge that they have and start to trade really hand in hand with them. Again, power really lies in the knowledge that you have. And this is just another tool that we have when it comes to TipRanks that we should be utilizing to make more informed investment decisions. We are going to take a look into a bank stock. Now, before I bring up what stock we're going to be looking at, I want to share with you guys this, and again, have you guys walk with me as we're painting this picture together. We think back to 2008. And immediately, what flashes to mind for me is the word recession, danger, red. And when I think about our current state of the market and where we're heading, right, especially when it comes to bank executives sharing with us that we have a looming recession, we have the Federal Reserve Chairman, Mr. Jerome Powell, sharing with us openly that we may not actually hit a soft landing, unfortunately. But we have to take a look again. What's happening down the line is most important because the stock market is really a forward-thinking vehicle. So I want to take us over to JP Morgan. Now, JP Morgan, by assets, is the largest bank within the United States. I have Jamie Dimon, CEO of JP Morgan. He often refers to their balance sheet as a fortress. I mean, this is like gold for me if I'm thinking about a CEO who's really talking about his stock. He's proud about his company, what they're building, a fortress. But I take a look at year to date and what's happening. They're down nearly 20%. And then I also think about what's happening when it comes to interest rates. Again, having this economic backdrop in mind is key because I know that interest rates are rising. The biggest beneficiaries to interest rate hikes are banks. Now that's a gold nugget for me to understand. But the tool that I want to bring us to is actually the performance, what exactly hedge funds have been doing when it comes to JP Morgan. Now, like I said, I'm a value investor, a longer term investor. And so when I take a look at a stock, I want to know if I can get invested into this stock for the next year and a half, 2 years, most of my investments, right, over 5-10 years of an investment timeline. So I'm taking a look at JP Morgan, and I know that hedge funds typically not day trading, not a whole lot of activity, right? Now, I can see that there is a trend. Hedge funds increased holdings by 8.4 million shares last quarter. Of course, now, just like everybody else, we get F-13 filings when they're released. However, here's where the magic really happens on TipRanks is that we can compile what all of these hedge funds are doing and give you guys all the information that you're going to need to know, because here's where it gets interesting. Scrolling down, of course, we could see investment after investment after investment with what smart money, hedge funds, what they've been doing. Right off the bat, we can see Greenhaven Associates, $510 million, right? Value reported in their last F-13 filing. Now, why is that important, right? We can see that they added. We can move down. We can see new positions. I like to even mess around with the star ranking to see what the top ranked hedge funds have been doing, adding, new position, adding. Now, with hedge funds being firms that are investing over $100 million in assets, I want to understand how they're thinking about the future. And right now, it's interesting to note that a lot of retail investors are actually straying away from the banks. Again, more emotional investing. But when you take a look at what hedge funds are doing, so-called smart money, I would say, based on what I'm looking at here, based on their F-13 filings, that they are preparing for the long term, which is what investing really comes down to, the long term. And so with that, I can start to paint a picture that these banks, at least JP Morgan, when it comes to their stock, in the longer term, may very well recover based on the fact that a lot of these hedge funds have that very same notion to pad up their portfolios, a very safe investment into a stock like JP Morgan. So with the trends, guys, with the tools that we have, no, I'm keeping it brief, I'm keeping it casual, I'm keeping it very, very simple for us. This is the first of many webinars we're doing, but these are just 3 tools that we have at TipRanks for all of you to utilize during a time when the stock market is in a total state of flux. There's a lot of emotional investing going on. Last week, on Monday, we're up, down, people are ready for earnings. Earnings reports come out. Some are good, some are not so good. We get a sell-off, volatility. My goal is to help you guys have the understanding of that bigger picture, and more importantly, move forward with putting the right tools in your investment toolbox to move forward with an investment. Now, with these 3 tools, guys, it's exactly what's happening. I'm handing you the hammer, I'm handing you the screwdriver, the nails, everything. I can't build the house, right, with you guys, but I can certainly be that guy who's greeting you at the door to Home Depot and Lowe's and saying, let me walk you to the aisle and help you pick out the best possible tool for your portfolio and for making your investment decisions. And I want to leave you with one final thought. And guys, if we think back a few decades back, investors, in the grand scheme of things, did not have the tools that we have here available now at your fingertips. But now, right now, today, we have the very tools that you can utilize to make investment decisions that are incredibly informed. And my question that I want to leave you with now is, what are we going to do with those tools? And so I highly encourage each and every one of you, open up the email, look through our packages. If you have questions regarding the packages, shoot me an email. We can jump back on together on Zoom, and I'd be more than happy again to walk you through what package would be best for you guys and how you're going to be using TipRanks. Because, like I said, what works for one may not work for somebody else, and that's our goal here, is to give you guys the best possible tools that make sense for you. Thank you guys so much for tuning in. Again, keep your eyes out for that email. It should be on its way to you now, and we'll see you all next time. Bye-bye, guys.